Hey everyone, I hope you guys are doing good. Let me introduce myself quickly. I'm an equity research analyst. I used to work with some financial advisors and consulting firms, but now I focus on managing my own personal account and sharing my research here with you. My goal is simple: break down complex investing ideas into clear, actionable insights that can actually help you grow your portfolio. And today, we're going to talk about 5 of the best cheap stocks under $5 that I think are worth a closer look. Now, let me be very clear from the start. Stocks under $5 can be volatile, they can be risky, and many don't make it. But some of them turn into multi-baggers if you get the timing. So what I'll do today is walk you through 5 names under $5, give you the business breakdown, the catalysts, the risks, and how I personally look at these kinds of investments. Think of this as part education, part research, and part strategy. By the end, you'll have a clearer picture of whether cheap stocks deserve a place in your watch list. Setting the stage. Why $5 matters. There's nothing magical about the $5 mark, but it's a psychological and institutional cutoff. Many mutual funds and ETFs won't even touch a stock under $5 because they're considered penny stocks by SEC guidelines. That creates both a challenge and an opportunity. The challenge: less liquidity, fewer analysts covering them, more volatility. The opportunity: if you do your homework, you can find mispriced assets before the big players return once the stock climbs above $5 again. That's the mindset I use, not treating them as lottery tickets, but as early entries into companies that might get re-rated by the market down the line. Stock number 1, IAMGOLD IAG. Let's start with a safer cheap stock compared to most, IAMGOLD. This is a Canadian gold miner, and what I like here is that you're not just betting on the company, but also on gold as a macro hedge. Gold prices tend to do well during inflationary environments, high interest rate cycles, or when there's global uncertainty. Right now, with central banks still buying gold aggressively and the dollar showing weakness at times, the setup for gold is supportive. IAMGOLD's new Côté mine is expected to produce between 220,000 and 290,000 ounces this year, which should significantly boost revenue. And because they already have other assets running, this isn't a one-project company. Now, is it profitable? Mining is always cost sensitive. Rising labor or energy costs can eat into margins. But if gold stays above $2,000 an ounce, IAG could surprise to the upside. For under $5, this is what I'd call a speculative hedge. Part commodity exposure, part turnaround play. Stock number 2, Blink Charging, BLNK. For our second stock, let's shift gears to clean tech. Blink Charging is all about EV charging stations. The stock has had a rough ride, at one point trading above $60 during the EV hype wave and now down under $5. So why even look at it? The simple reason is demand for EV infrastructure is not going away. Governments across Europe, the US, and Asia are mandating higher EV adoption. Every one of those cars needs charging access, whether at home, work, or public spaces. Blink has been landing contracts internationally, including expansion in Greece and Chile. They're still not profitable, and they'll need to balance growth with cash flow. But I see Blink as a high-risk, high-reward play. If they manage to scale, get recurring revenue from charging services, and avoid dilution, the upside from today's price is enormous. This is one of those names you don't go all in on, but even a small allocation can move the needle if the story plays out. Stock number 3, Elutia Elute. Third on the list is a lesser known company, Elutia. They operate in medical devices, specifically in neurostimulation, wound care, and surgical reconstruction. Now, small cap medical device companies can either flop or get bought out, and that's what makes them interesting under $5. Revenue for Elutia is small compared to the giants in the sector, but growth estimates are strong. Analysts expect sales to ramp as their products gain traction, especially in the wound care space where hospitals are always looking for innovative, cost-effective solutions. The risk, profitability? They're not there yet, so it's a bet on execution. But in healthcare, innovation can move fast. And once you land key hospital contracts or FDA approvals, growth can accelerate sharply. This is one to watch closely if you're comfortable with biotech-style volatility. Stock number 4, Globalstar GSAT. Now let's talk about communications. Globalstar is a satellite company focusing on mobile satellite services. And here's the kicker. They've been in the spotlight because of their partnerships around emergency communication services. The demand for satellite coverage is rising as more devices, think wearables, smart devices, IoT, require always-on connectivity, even in remote areas. While companies like Starlink dominate the headlines, smaller players like Globalstar are carving out their niches. At under $5, you're basically betting on whether they can scale their contracts and keep improving their tech. The good news is they already generate revenue, and with more satellite launches expected, this could be a growth story that the market re-rates higher. Stock number 5. Lucid Ltd. Finally, let's end with a more controversial name, Lucid Motors. Once touted as a Tesla rival, Lucid has struggled with production, cash burn, and scaling issues. At times, the stock trades under $5, which is wild for a company that once had a market cap north of $90 billion. So why even consider it? Well, Lucid's cars are arguably some of the best luxury EVs on the market. Their range and technology stack are impressive. The big question is, can they lower costs and actually produce enough units to matter? They've been backed by Saudi Arabia's public investment fund, which gives them capital cushion, but execution risk remains very high. If they do turn the corner and start delivering affordable models, the upside from today's levels could be dramatic. Wrapping it up. So those are the 5 cheap stocks under $5 that I think are worth keeping on your radar. IAMGOLD, Blink Charging, Elutia, Globalstar, and Lucid. Notice how I chose a mixed gold for stability, EV infrastructure for growth, medical tech for innovation, satellite for future connectivity, and an EV maker for speculative upside. The key takeaway is this. Don't treat these as guaranteed home runs. They are speculative bets. Allocate only what you're willing to risk. But remember, a few years ago, Nvidia traded under $5. Apple once traded under $5. Now, most stocks under $5 will not become Apple or Nvidia, but history shows that some do. If you found this breakdown helpful, make sure to hit the like button, subscribe for more research-driven content, and let me know in the comments which of these stocks you're watching or if you have your own under $5 ideas. Well done guys, that was all for this video. Thanks for watching, and I'll see you in the next one.